Hey guys, one of the questions I get a lot is about buying a second home. So let's clarify. Are you looking for a second home like a vacation home somewhere else? Or are you looking to keep your current house and buy a new house? So let's talk about both of those. So if you're looking to buy a vacation home or an investment property, your best rates and terms are typically going to be 20% down, right? So because you don't occupy a second home, you have to occupy 10% of the year. So let's say you're in Salt Lake like me and you want to have a vacation home in St. George, easily doable, right? At that point though, for the same 20% down, rates are very similar on investment and second homes. You may as well do investment, that way you can rent it out as much as you want, right? But now, if you're thinking about keeping your current home and getting a second home, that's a different animal. Let's talk about it. If you don't need the money out of your current home, it's easy to go buy a second home. Traditionally, you can do it every year or so. When you sign documents at closing, you basically state that you're going to live there for a period of time. Typically a year on FHA, and more often than not on conventional as well, although I've seen 6 to 9 months. But if you're going to buy a second home, it's pretty easy. As you're departing that residence, then essentially you can get a renter to offset that payment and go buy a new house if you've got down payment to buy a new house with as little as 5% down again on a conventional loan. Now, if you have an FHA loan, and you try to go buy another home with an FHA loan, that's going to be very difficult, if not impossible. But there are all kinds of options out there. So let's say you love your house, you bought it a couple years ago, maybe you outgrew it. Maybe your rate is super good and you can cash flow $1,000 a month. With conventional loans, sometimes you can even count some of that cash flow. They're going to take the amount you get paid in rent at 75%, and that's what's going to be used to offset your debt, okay? With a VA loan, if you go from a primary to a primary, you can actually offset 100% of the payment. So it's super cool. So you want to look at all your alternatives and options and make sure. I believe real estate to be the best way you can create wealth in America. I personally own, more than a dozen doors, right? Commercial, residential, whatever that looks like. So my opinion is, if you can figure out a way to keep what you have, you should. Now, if you just want to buy your dream home and not care about being a landlord, then you have the ability to basically take that money and roll it over into the next one. But there's all kinds of opportunity out there. So if you're buying in a new primary residence, right, you can buy again with as little as 5% down, and actually in some instances 3% down. It's going to depend on your situation, okay? With VA, if you have entitlement, you can still buy it 100% based on how much entitlement you have. Conventional, normally 5% down though. And obviously you're going to qualify as if it's a primary residence, if you meet local area, average median income. Sometimes you may be able to get better deals, but second homes do exist. So we get this question a lot. Reach out to me. Let's talk about all your options. Let's talk about whether it makes sense to keep it and rent it, whether it makes sense to sell it, whatever those things look like. We can run through all scenarios, make sure you qualify. My goal is to help you maintain all the real estate you've worked so hard to get. That may or may not be the case. It may not be available, but let's talk about it. And if you're thinking about that second or vacation home or investment property, let's talk about that as well. We've got loans that don't require income proof, okay? We've got loans for self-employed borrowers with bank statements and different things. We can find a solution to all of your problems, every loan, every single time. Reach out to me with any questions.